Hi, welcome aboard the Strategy channel, in which we discuss the markets from a supermacro context all the way down to the daily noise. This is no financial advice whatsoever, so take it educationally. First, let's have a look at the supermacro context of Bitcoin. When plotting all price data starting at 2009 until now, on both horizontally and vertically logarithmic plot, we get a chart on the left. What is very interesting is that we have one big Elliott wave starting in 2009 all the way to 2024. Notice that also the horizontal axis is on a logarithmic scale, so the time is contracting, meaning that the distance between halvings on this chart gets smaller and smaller over time. Okay, so what I found is that we have this setup on the right. We can find it back in this structure here. And if we take the start of the encircled Elliott wave here, 1, 2, 3, 4, 5, and we take it like this, then it turns out we have a great count which like this, 3, 4, 5, like this. Let's make it also super millennium and black. And let's see, it should be a bit lower, like this. Okay. Well, now we have a comparable setup like this wave here. Then this 2-3 wave here can be divided up in 5 waves itself with brackets. So let's do that now, like 1, 2, 3, 4, 5. I can make them brackets as well, so millennium. And then also the 2 bracket, 3 bracket can be divided up in 5 subwaves. So like this, starting here, 1, 2, 3, 4, 5. And that's the sub-millennium. So this third wave extension of a third wave extension basically means that when zooming in, the third wave can be subdivided in 5 subwaves itself. Well, if we also look at the first millennial wave, so millennium wave, super millennium, I mean, the degree, it's the encircled one, so from 0 to 1 can also be divided in a shorter wave, like this, starting here, 1, 2, 3, 4, and then 5. And also the wave starting at 4 can be subdivided in 5 waves, like this, 1, 2, 3, 4, 5. So from this perspective, we are in the 5th wave of the encircled 4 to encircled 5. And the 5th wave is also called a blow-off wave. If we look at blow-off waves in this chart, we can see here, this one going here, it's a blow-off wave. Then we have here a blow-off wave. And this whole thing is a blow-off wave. It goes parabolic. And the character basically is that it goes up only. And there are a lot of people thinking we are going back to 12k or maybe 20k or 30k, but a move in its 5th wave is always going straight up. And from a supermicro perspective, Bitcoin is in its first wave from a even more zoomed out perspective. So this whole thing up is the first wave of Bitcoin's lifetime. It has never seen a recession, for instance. And a lot of things are lining up for blowing off, like stocks, crypto, and well, when after blow off top you often have a huge correction, and because this whole thing starts to correct, we get a super macro correction as well, which might take Bitcoin down from 200k at the top of its 5 wave down to sub 10k. When zooming in on the final wave up, starting in 2019 until now, we get the following figure. Starting at a first impulse, then a sharp correction almost back at where it started, but not below, so that's a valid count from an Elliott wave perspective in 3 waves down. Then we get a momentum phase, the third wave, and then finally we have a 4th wave down, which is a complex flat correction. It doesn't feel flat, but it is a flat correction. If we take, for instance, the top of the 3 wave to the start of this wave, we can see price fell to the 0.5 Fibonacci retracement level exactly. So that's not a sharp correction. For instance, if we look at the first wave up where it started, that's a sharp correction, and it goes all the way below the 0.23 Fibonacci extension. So that's a sharp correction. So it doesn't feel like a flat correction, but it is one on logarithmic scale. And now we are looking at the 5th wave up for this whole Elliott wave structure after the 4 wave, which is also often called a bear trap, and it qualifies as such in my opinion when looking at, for instance, how people felt at this point. It's clearly a bear trap. Well, then I've drawn 2 channels through the green dots, and for the first correction and the second correction in this Elliott wave. And when breaking out, there's first a big struggle which takes months, and also in this time has taken months, and now when it breaks out, the parabolic move up starts. So, well, I drew a parabola back here. Well, now price is slightly consolidating, but it is still in this parabolic move. Also, this 5th wave, I think it will play out before the halving. Not necessarily. There will be a 5th wave, parabolic or not. I need to have the sub count. Should also add up with 5 waves. So that's what I'm looking for another correction within this wave up. That will be the 4th wave of this blow off wave, and then I can decide whether anticipate basically the move and not getting out at the bottom of this local 4, but at the top of the 5. So that's zoomed in a bit more. Then if we look even further, I can have a look at this last wave up, which I sketched also shortly. Well, starting at 2023, we have basically this parabolic move upwards. Well, we have created 3 bases. Bitcoin has created 3 bases, but people bought and sold. So basically we created. We have 3 bases, and when breaking out from the 3rd base, we have, as per this theory book, a steep increase in the 3rd wave, which is also the impulse wave. I sketched roughly how it should work out. Like, okay, we will have a 4th base here. That's basically the 3-4 wave of this whole wave up. So 1, 2, 3, 4, 5. And because this first wave has a sideways correction here, A, B, C, it's to be expected that this fourth wave will be a steep one. So a steeper correction than this one. So it could also go first to 100k, then a steep correction to say 70k or whatever, and then a fifth wave up, after which we have a sell point. So this is a structural setup. That's why I'm also not changing this line, because it's to convey the structural analysis here and not in terms of time per se. Although I'm expecting it to play out before, say, May next year, before the halving, and that's because the steepness of a blow off top often is that steep and not less steep. So if we have the top like at the end of 2025, then it doesn't qualify as a blow off top in terms of speed, velocity in the vertical direction. And that's why I'm anticipating a move before the halving. Okay, so that's basically zoomed in to the very micro chart here. And currently Bitcoin is at 42k and ranging sideways. Also, of course, this Bitcoin ETF will likely get confirmed at the start of next year, and that might fuel this last surge to unseen heights. Okay, so that's it for Bitcoin for today. Let's briefly discuss the Steve's 5.3 Bitcoin theory. It states that when taking the percentage gain from a cycle, which starts at a bottom to a top, local top, and divide the percentage gain with the next cycle percentage gain, then you will always get 5.3. As simple as that. So red over orange should add up to 5.3. It doesn't. It is 5.12. Orange over blue adds up to 5.14. Also not 5.3. And if we take divide the third cycle by the fourth cycle gain, we get 5.75. So all those don't add up to 5.3, and even the first data point is flawed because the initial point of the first cycle doesn't make any sense, because there's a lot of price data before this data point. So why not taking this, why not starting, for instance, there? Then this percentage will change, and eventually also this value will change to infinity, because the first cycle started at $0, not at 0.1 or whatsoever. Bitcoin wasn't worth anything, and the step going from nothing to something is basically infinite. So we all know it's not possible to divide by 0, and yeah, so the first data point can be calculated or should be taken as an infinite step. Well, then we are left with those two values, 5.14 and 5.75, which has an average of 5.4. But probabilistically speaking, relying on only two data points for prediction is unreliable and lacks statistical robustness. By the way, I'm also wondering why not the COVID dip has been taken into account, which is a large correction starting from the bottom, and that's something should be taken into account, and this theory does not take it into account, and yeah, it's basically fitting its own narrative by picking the first starting point and well, not taking into account major dips. So basically that's it. I reject the theory. When looking at the alt cap, the total free, basically all altcoins minus Ethereum, we see that a nice head and shoulder bottom structure is playing out at the moment. We have a left shoulder to A, then A to the head, which is the lowest point. Then we set B, and we can draw a trend line for A and B, and we get a blue neckline, and then a higher low is printed, the right shoulder, which is higher than the head, and price has broken above this blue trend line, which is very nice. It's a strong move because it's already broken also the A top here. So we are clearly reversing from lower lows, lower highs, back to higher high, higher low, higher high. So the trend has been shifted from bearish to bullish using this 1.5 year bottom structure. It looks very nice. Also, when comparing the alt cap to Bitcoin, for instance, it's remarkable that Bitcoin front runs the altcoins usually. So if we show them sideways here, new pane please. Yes, okay. So this orange line is the Bitcoin price, and then if we zoom out, this should be on a logarithmic scale as well. This one too. Well, then it's nice to see that when this top aligns, the bottoms align, but in the meantime, when the next bull run starts, Bitcoin often front runs the alt cap. So where the alt cap places a new low here, Bitcoin places a higher low, and when running upward and breaking its all-time high, the alt cap is like here, below its all-time high. So that's now also the case. Alts are a bit lacking in terms of structure here, and I can show it nicely this way. You can see the tops are aligning, so the altcoins usually have a last final sprint, which is when BTC is rolling over, and then they line up at the tops and at the major bottoms. You can see it here as well, and at this top too. What's nice to see is that BTC is really front running. If we take the top to the bottom here, 15,400 is the bottom here, so something like that. The top is not 65k but 69k. Wait a second. Yes, like this. We can see that Bitcoin has run into the Fibonacci resistance here, 0.618 to 0.786, the green zone. When drawing the same one here at the alt cap, we can see it's only at the 0.382. So the altcoins are really lacking, but coming from a really strong bottom setup, and when Bitcoin can overcome this resistance here and run to new all-time highs, altcoins will likely follow and also run into this resistance, and then at the end they usually line up at the top. So this gap here can be filled, and that's it for altcoins. I'll follow up on this chart, of course, in the next year, and it looks very good for the alts as well. When looking at the stocks, it's nice to see that we have a large cup and handle setup for the S&P 500. The S&P 500 started correcting as well at the end of 2021 and has formed a huge cup with a handle, has broken above the handle, and has closed very close this year to its previous all-time high back in December 2021, January. So will this become a double top, or will this cup and handle play out? We will see next year. But it's a fact that the Fed is gone very dovish recently. So that's really fueling the stock market at the moment. And also the dollar gets headwinds because of that. So, well, the target for the S&P 500 here is in the 6,000 region, and well, it has broken above, and it has had its highest close in this year ever. So it has a really nice, strong close this year. Then, when looking at the Nasdaq 100, sort of the first 100 companies contained in the S&P 500, so you could compare it to Bitcoin versus altcoins. Often the Nasdaq is leading the S&P 500 and front running it, like BTC does in a bull market. Okay, so we have also a nice cup and handle setup here, but it already has printed an all-time high and even closed the year above the previous all-time high, which is a very strong signal that this is a rigid move and not something that's weak. It's not a weak move. Also, the handle here is a bit clearer than on the S&P 500. This is a very neat bull flag setup or downward channel because it's longer than 3 weeks, and it has broken above, and now this whole cup and handle setup is set up to move to its target and blow off to how much is it? About 23,000. So that's it for stocks for today. It's also important to have a look at the US dollar. This pattern I'm following already for a long time, and the green uptrend has been broken at the start of this year. Then we had a bearish confirmation, like it breaks down, then tests the trend line from the other direction, and then has a sell-off. Then we had a 14.5 month low here, so all the way back to start 2022 we had this low below the 100. Then there's a strong rally of a lot of green weeks for the dollar index during July until roughly October this year, and there it well, hit the resistance, the Fibonacci resistance, when taking the top here to the bottom of the correction here. We see clearly the 0.5 retracement has acted as a strong resistance for the dollar here. Well, price is now moving down. Also, this little blue downtrend has been broken, retested here, and now the dollar is going down. What's very important to monitor is whether the dollar can set a local low here and well, continue this reversal setup, or that it breaks down below this July low of 2023 and basically reversing back again to a downward spiral. From a macro perspective, I think it will break down, but we'll see. Also, because the Fed has become very dovish, and there are likely a lot of rate cuts in the next year, it is very reasonable that the dollar will continue to slide lower. Also, because a lot of countries have seen, like Russia, that the United States can freeze your US dollars whenever they want. Well, they can. A lot of countries are fleeing from the dollar into other assets, so that's also a thing why gold has been rallying recently. So that's it for the dollar. I want to show my new website, which is gertvanlagen.com, or in my own language, gertvanlagen.com. Well, it shows some things from the Strate𝔾 ecosystem. So I have a weekly update via the mail or the Substack app. That's Strate𝔾 updates. It's partly free, partly paid. And I have the Strate𝔾 channel, which you are looking at the moment, which is free. Then I have also Strate𝔾 trades every month I show a Elliott wave based setup in a Telegram group, and I show how I place my trades there and which targets and stop losses I use. There's also a dashboard available for that. Also, for my paid subscribers, I share my whole portfolio, so you can including a dashboard with targets and where they are. Strategy charts is basically my Twitter timeline. It's free, and strategy learning are some nice links and so on to learn Elliott wave, for instance, on my website. I will grow here a larger platform in the future, but for now it's free and not very much information yet, but that will grow. So that's enjoy the strategy ecosystem, and if you want to join, just click this button and click join, and well, you will go to my Substack page. Thank you for the attention, and consider subscribing or ringing the notification bell. See you next year, and have a very nice New Year's Eve. Bye.